Good afternoon, everyone. It's our finale with RMI Professional Corporation. I hope everyone's had a fantastic week. I know we're in the middle of January, so it's an accountant's favorite time of year. We all stay very busy at this point in time. So today, as everybody's gearing up for tax season, I wanted to touch on a topic that a few clients have reached out to me over the last week and asked about, and that is RSP contributions. So RSP deadline is going to be coming up end of February, of course, like every year. And the one question I always get is, how much should I contribute? Should I contribute? And I want to just touch on that a little bit today. So the first and foremost, RSPs are a very key tool, but they have to be used properly. I hear a lot of people just say, put money in RSPs, put money in RSPs, and it's not necessarily the right decision for everyone. So the strategy behind using RSPs is so you can grow your money tax-free over time, but more importantly, you can reduce your income from a high income tax bracket today to a low one in the future once you retire. And so if you are actually in a low income tax bracket today, you have to really decide, does it make sense for you to put RSP and do RSP contributions? If you have, we've touched on holding companies in the past. If you have a holding company and you save a lot of your money inside that company, again, you have to really decide, do RSP contributions make sense, or can you look at something else like a TFSA? Now, for those where it does make sense, the things to really start to consider is most importantly, how much contribution room do you have? If you over contribute, there are some big penalties from CRA, so you want to make sure you're confirming that amount and making sure you're not over contributing. The other next big factor for you to think about when doing RSP contributions is how much tax are you actually going to owe. So if you have other income like rental income or investment income, RSPs can be a good strategy to be able to reduce and make sure you're not paying any tax on that because of an RSP contribution. So there are a few things to always look at, and as I always say, make sure you're looking at the big picture, make sure you look at your overall financial situation before you actually make a decision. And as always, if you have any questions, we're always available to chat. Once again, it's our finale with RMI Professional Corporation, and I hope you have a great week. Thank you.